In this example, we are looking at how to compute vertical analysis. So previously we've done the horizontal analysis and the trend analysis, which is a version of horizontal analysis, and we're looking kind of like, on the horizon, year to year to year. But a vertical analysis, we're going to be analyzing our financial statements vertically. And what I mean by that is we're going to look at our statements and we're going to compare in 1 year, like our percentage of how we're going to compare everything to like net sales. So in this example, the vertical analysis allows us to create our common size income statement. So it helps us determine the percentage that everything is. And in an income statement, it's a percentage of net sales. We compare everything to net sales. In a common size balance sheet, we compare everything to either total assets or total liabilities and owner's equity, because those are the same amounts on a balance sheet. So we have our numbers up here. I'm going to start with 2014 just because it's first. So basically what you're doing is you're going through here and you're going to divide everything by our net sales. So net sales, 212,000 divided by 212,000 is 100%. Then we take our cost of goods sold. Cost of goods sold is our 127,200 here. We're going to divide it by our 212,000, and that's where we'll get our 60%. Then gross margin. A couple of ways you can get gross margin. You can keep in mind how an income statement works, and we know that net sales minus gross margin, or minus cost of goods sold, gives us gross margin. So this has to equal 40%. But additionally, if you would take this amount here and divide it by our net sales, you would get 40%. So then we take our selling expenses divided by our net sales, and we get 25%. We take our general expenses divided by net sales, and we get 12%. Those two added together equal 37%. But if you also take the total of operating expenses, 78,440, divided by net sales, you'll get 37%. And so then operating income, gross margin, again, minus total operating expenses gives us operating income, which is where our 3% comes from. Or you can take our actual dollar amount divided by the dollar amount for net sales. So then you would just go through and do the same thing for 2013. Only you would use the 2013 numbers and compare everything to the net sales.